If you see the options data, 450 again, that call option strike price has massive congestion. So I think it will find it difficult for that level to be crossed out meaningfully and then move in a in a meaningful way. If you want to play it for dividend or margin of safety in times like these, sure, you can keep a tight stop loss around the 419, 418 mark. But I wouldn't really buy it for a momentum trade and a positional one at that.
Okay, you're just a minute or so from the pre-open session and your implied is showing you a 90-point knockdown. These are the sectors and stocks that are going to be in focus this morning. Take a quick look at them. One is Astral, EMS, Viatech, Wabag. Why? Because announcements have been made on Jal Jeevan Mission 2.0. You might see a sentimental up move there. Brent crude has fallen once again. Of course, it's come back from where it's fallen thanks to the US Energy Secretary, but still below 90, negative for an ONGC Oil India, for paints companies, aviation companies, for tire companies, it's a positive. Indigo has its own story going on right now. So look at Indigo. Apart from crude, they have the crude story going on. They have the change in management. Peter Albers could see an immediate negative reaction for a bit. And plus, Air India has increased the fuel surcharge, gives a leeway for Indigo to increase airfares as well. For fertilizer stocks, there's a strong technical setup. Watch out for some of those as well in trade today. And of course, press note 3 now with an ease of investments from China coming in. Watch out for a Dixon, a Keynes Tech, a Minda Corp, and a whole host of those companies. Maybe Tata Motors PV sees another move coming in. Government is going to launch a new version of PM Kusum Yojana. That's going to help as well. So some of those initial prices is what we should look at this point. I mean, the Nifty all over the place, but will be settling down soon. It's showing a positive trend right now as you're seeing the first ticks coming in on the pre-open session. Interglobe Aviation, just going to pull that up. Remember, it's the absolute first tick, but I'll still pull that up for you. 10% down right now. We'll see where that goes. Chandan Taparia joining in, Head Technical and Derivatives Research at Motilal Oswal. Chandan, very good morning to you. Call on the Nifty and the Bank Nifty first.
Yeah, good morning, Tamanna. Thanks for having me. So we witnessed some recovery in the market in last 2 days. However, the major trend is negative as indices are making lower top, lower bottom. But yesterday recovery is slightly remarkable, and because of that, it can attempt to a key hurdle near 24,444 to 24,500. So I believe with the support of 24,000, it can witness a bounce towards 24,500 marks. Now looking at the Bank Nifty index, it also witnessed some recovery from the bullish candle. Some island reversal kind of pattern is visible on the daily chart. So as of now, it has support near 56,500, and with that support, it can bounce towards 57,500 marks. So looking some more recovery or short covering trigger in both the indices, but we need to check whether the follow-up action happens or not.
Okay. And what about individual stocks, Chandan? And good morning to you.
Good morning, Alex. So yes, we have noticed that selective pharma counters are doing well. So if I look at the Nifty Pharma Index, it has given a consolidation breakout, holding well above its 50-day exponential moving average. So most of the pharma counters on radar, and here I'll pick to buy on Oro Pharma. This counter has given a consolidation breakout on the monthly chart with a decisive hold above 1270 levels. Major trend is positive. We have seen some surge in the trading and the delivery volume, which indicate up move in the counter. So one can buy with support of 1260, and this pharma counter can head towards 1333 level. Second trading idea, there is buy on ABB. Recently, it completed a pole and flag pattern on the weekly chart, which has bullish implication. Selective capital goods counter are doing well and witnessing buying interest. In fact, the consolidation breakout is happening on daily and the weekly chart with the positive price setup. So recommending to buy with support of 6100, and ABB can head towards 6450 to 6500 levels.
Okay, some very early movers. We told you about what's happening with Interglobe, but on the winning side, look at Oracle Fin. The parent company has posted great results, and you saw the stock Oracle, OFSS, you saw the stock going up in trade in the US markets. That's a follow-on impact there. Fact is, once again, fertilizer company, once again shining. Berger Paints, of course, all of the crude beneficiaries are doing well. And we told you, that could be something that you see today as well. Hexaware Tech, bouncing back and looking quite interesting. So is Tejas. These are stocks that were moving well last few days and then got completely dumped down. So they're showing a bit of recovery. But I want to come to you, Chandan, on Interglobe. If we see a very weak start, would you use this as a buying opportunity?
So as of now, trend of the counter is negative. So again, it's very tough to catch the falling knife. However, in last trading season, it witnessed recovery, but the recovery is only happening as a bounce back move. So as of now, I'll avoid. However, major support is near 4,000 with hurdle at 4,500. So we need to either look at the decisive close above 4,500 or hold near 4,000. So I think wait and watch kind of mode, or again, we need to review the counter. As of now, not in hurry to pick the counter on lower levels.
I know someone who doesn't have any fear of falling knives.
Only in some cases. Not every time.
No, of course. That would be difficult.
See,
but on Interglobe. On Interglobe.
No, so Interglobe, I'll not catch this falling knife.
Why not?
Because I feel that there are safer stocks which benefits from crude oil fall. Like I said, I always keep saying HUL, Pidilite. Those are my favorites.
But we spoke about this yesterday, and I just for the benefit of viewers who have not caught this entirely, you said in relation to PVR, you like it because of the setup of the industry.
Correct.
The setup of the aviation industry is similar. Interglobe Aviation falls bang in the middle of that kind of a setup. So therefore, why do you not like it?
No, the point is that right now, see, there is a CEO change also now. So let it settle down. I'm not saying that I'm completely averse to buying
But
Indigo.
it's not a committed, let's catch the falling knife kind of conviction buy.
And for Indigo, I think just one point to add is a lot depends on the way raw material price movements also.
40-45% of.
That's positive today. That's a positive
today, but again, longer
Today,
term
but again, it can
perspective,
change. You don't know.
And PVR would not really have that kind of a
Five flop films and the mood will go.
But I know, but I think everyone will still go and watch once at least. That entertainment perspective, I feel comes back.
I don't think so. it has become so incumbent on the content, which is great that content is now king. But there was a time when people would go to the movies because, well, aur kya karenge? But you have to have a great movie to bring people in right now. I mean, at least that's what I think.
I agree with this entirely.
I think but this year there are great movies. So be rest assured.
Okay. Kush on Indigo very quickly. So we just wrap that up.
No, I'd wait up a little. 4,100, close to the recent low. That could be tested again. If that is broken, further downsides, cannot be ruled out. Like Chandan also said, the bounces that we've seen have more so been, those dead cat bounces or bounces from those oversold territories. Nothing meaningful. So yes, remain a little cautious. Once this settles from a long-term perspective, this will become an interesting buy. Not sure if we are there yet. So right now, it's just a wait and watch.
Okay. Going across to Sharad, he's joining us for the big brokerage call this morning. Sharad, why is Godrej Properties on the radar?
Well, Tamanna, last 15 to 18 months, realty stocks have, taken a very big beating, and now some value is also emerging. At least the NAV numbers, which I checked, that was also actually cheaper than the market cap. The Jefferies, they have maintained a buy rating, and the target price is set at 2,700 rupees per share. And recently, there was a promoter's purchase of almost 3.5% stake from the open market as well, reflecting a strong belief on the long-term residential demand. And of course, the company itself is one of the largest players, so they can expect benefits of consolidation. Also, management's focus on the construction scale-up and operating cash flow surplus augurs well for FY27, and the reported ROE, the return on equity, is on track at 20%. That's why there is a little bit of bullishness coming in from the brokerages for the realty players, and also technically it's looking sound when it comes to the realty players.
Okay, so Godrej Properties, again, the fact that the promoters are coming in is something that, Street always loves. We'll get a quick view on Godrej Properties. Also want to talk about the QSR space. And remember, yesterday this was in focus, restaurants coming and saying that we will have to shut if, we don't get gas cylinders. Elara has an interesting take. They're saying QSRs will benefit if consumers shift from LPG-based cookings. That's quick service restaurants. They're saying LPG shortages at restaurants could divert demands to QSR chains because most of these chains rely on electric ovens and fryers. So the LNG, CNG disruption may impact logistics and supply chains, of course. No visible impact on orders in the last 2 days. What they're tracking right now, I suppose, is your Eternal and Swiggy or Zomato Swiggy orders, which seem to be Largely okay, but I thought that was interesting thought that the slow cooked food will go out of the window. You'll have to stick to burgers and fries and pizzas because at least they're in electric ovens if you want to order in. Do you see any impact on the space if these gas supply shortages continue?
I think it is very small, very one-off kind of thing. It's very easy to ignore all these things. These are just 10-15 days phenomena. You cannot. I think most important thing which I would like to say, and that's why I tell sometimes to catch falling knives, is that you should know the intrinsic value of the business. You should have that knowledge of the business to find the intrinsic value of that particular business. Right. Then you can take advantage and buy into this small, one-offs which happen. Here in this case, actually QSR numbers are not that great. So otherwise, I would have also taken this as an opportunity if it falls due to all these things.
No, QSR, their claim is QSR will rise.
Okay,
maybe the delivery apps might fall, but QSRs will rise. Devyani, Sapphire, those will rise because that's all that you can cook.
Delivery apps anyways are facing intense competition. So I would say that because market has given them money to burn. So there's an intense competition. So anyway, that space I am keeping away from only.
So, but you don't like the hospitality space either?
So there, Indian Hotel is a stock which is under my radar always. I would like to buy it on any such bad days.
Okay, so Indian hotels from the hotel pack is interesting, but Macquarie has come out with a note on their quick commerce where they are saying that the growth momentum is slowing. They're expecting further momentum when it comes to sequential growth from a 25% in the first half of FY26 to 5 to 10% in the fourth quarter. And they're seeing continued downside to the consensus due to rising competitive intensity. Now, divergent views that we keep getting when it comes to quick commerce. On the charts, if I have to come to you on Eternal, Swiggy, how are they looking?
Not very encouraging. I mean, even if I take out, all the news that is happening, positive, negative, the markets are the best judge and they'll tell us that. Look at the primary trend for Eternal. Look at, that trend for Swiggy. Eternal's gone into a massive tizzy on the downside. So, I'd be a little watchful. Some rebound from oversold territories here and there cannot be ruled out. But for now, until some key, resistance levels, especially to begin with, that, 245, 250 zone that is taken out, I think this downturn could persist. Swiggy has always been that second pick, if at all, in that space. So, I would still stay away from, Eternal and Swiggy for now.
Chandan, I want to come to you on Godrej Properties. We spoke about that in our big brokerage call on Sapphire and Devyani.
Yeah, so to comment on Godrej Property, in fact, the Nifty Realty counter or Nifty Realty index has been making lower top, lower bottom. However, Godrej has been consolidating or finding some support, but as of now, not getting the clarity. Measures support as of now is near 1600, hurdle is at 1750, so need to look at that level as well. Looking at Devyani, as of now the structure is weak, has been making lower top, lower bottom on the daily and the weekly chart. If it holds below 110, and I think the counter is trading near its all-time high, so hold below 110 can drag it towards 105 to 102 kind of level. And talking about Sapphire Food, again I believe some sort of consolidation is required. So in all three counter note, looking for bigger swing, looking for some sort of consolidation as of now.
Stocks that are reacting to updates, one of them, we pointed it out for you, HG Infra has gotten an over 400 crore order for civil works in Madhya Pradesh. This is something that will be executed over the course of 18 months. The stock is up in the pre-open session. The question is, do you trade it? Kush, on the charts?
No, Alex, it's more of a hold. Massive downfall, massive underperformance. If I can, draw a parallel, we've seen these kind of downticks. Tejas is one stock that we've discussed time and again. This is a very similar move where it's been in, a massive downfall. There are rebounds on the back of positive news. How sustainable that is a little questionable. So it's more of a hold. I doubt if too many people would have gotten into at lower levels. If you did, keep a stop loss at 500, 495 zones and continue to hold. I wouldn't initiate a fresh position in HG Infra right now.
Okay. Chandan, quick view on the top gainer and top loser on the Nifty after the pre-open session. Reliance Industries on the upside. A lot of news flow today after Donald Trump's post, etc. And ICICI Bank on the downside. How would you look at both of these on charts?
So I believe the bottom has formed in the Reliance. In fact, 4-5 days back it made low near 1300, and before that also almost 1335 kind of level has formed. So some sort of bullish divergence is clearly visible on the mechanical indicator. So positive stance on the counter buy on decline could continue. As of now, with the support of almost 1390, it can head towards 1450. Looking at ICICI Bank, I think the counter is taking support at the falling slope. Already from the bottom near 1250, that could act as a key level. So buy on decline could continue with support of 1250 for an upside target towards 1350, 1370. So Reliance is positive and ICICI Bank can be bought on declines.
ICICI bought on declines. That's the view coming in. Chandan, how are you looking at pump companies or water-related companies like EMS, Enviro Infra, Iron Exchange, Jash Engineering? All of these are in focus today on the back of the Jal Jeevan mission outlay that has been increased. Fundamentally a positive, but are you seeing any positivity on the charts? Because all of them have been beaten down.
Yeah, so I believe some support-based buying could be there, whether we talk about Iron Exchange or whether I think Astral we can take in this name as well, which looks quite promising. So I believe because of this Jal Jeevan 2.0, some sort of recovery could be there. We are quite positive on the counter like Astral, where trend is positive. It has multiple support near 1620, and with that support, it can head towards 1750 to 1800 kind of levels.
All right. Just a few seconds left for markets to open this morning, and it's been a seesaw overall. Are we going to open in the red? Yes, looks like we are, but completely flat actually. This is not bad. Look, your Nifty implied was a bit deceptive. We are in a flat range-bound trade. There's cautiousness on the street, definitely, because it's not clear what's happening. But look at it fundamentally. The biggest concerns for the markets have receded. Brent is well under 90. So you've gone from 120 to 90 in a span of 48 hours, which that itself, that volatility itself causes fear, but at least now it's under 90. The focus back on domestic stories and domestic issues coming in, which is why you're seeing the Nifty holding up at least above the 24,200 mark in the first ticks. Even the advanced decline ratio actually is positive if you look at it in an overall and overview. Your mid cap and small cap seem to be doing okay. Banks are a little soft. The Nifty IT is what I want to look at. Interesting note by Nuvama saying they have a contrarian view on IT stocks. Nifty IT also looking okay, 0.5% up. Let's pull up the Nifty heat map for you this morning, this Wednesday morning, and look at what's happening there. Well, IT is what is dominating. Wipro doing well as top mover. Reliance Industries heavyweight is helping actually keep the market up and the Nifty up more than anything else. That's because of the investment in a Texas refinery which has been announced by Donald Trump. That is why Reliance Industries is having this action. Suffice to say that there has been no official response or any detail which has come from the company till now. The street will be waiting for that. We do not know what exactly are the details of that deal. Tech Mahindra doing well this morning as well. There's a positive note on Geo Finance. Indigo, well, is brushing off the removal of its CEO. And remember, we gave this stock a thumbs up when we started this morning on our watch list because it's the promoter who's come back in charge. And frankly, there are a lot of ex-top Indigo employees right now in the aviation industry. You know who you are. I wonder if you're getting those calls right now. Tata Steel also doing okay. On the losing side, Kotak Mahindra Bank, Shriram Finance. We talked about what Macquarie is saying, that if there are equal rules for private banks and NBFCs in terms of how long their executive directors can stay on, what their term would be, their retirement age and their payment, it would be a bit of a negative for some of these. Shriram Finance also rose a lot yesterday, so maybe some profit booking coming in there. Apollo Hospitals, Bajaj Auto, Eicher Motors. It's a down day for auto as well, but less than 1% down here. I want to pull up the contributors before Alex comes in and talks about the broader markets as well. On Nifty contributors, you're seeing again the HDFC ICICI pairing pulling down the Nifty. Even CLSA is saying this is a fire sale, but the fact is that if you have institutional money which is trying to exit right now and shore up its reserves maybe elsewhere, then they're going to sell what they bought. and that is the private banks, which is why Axis Bank is there as well. Reliance Industries, Sun Pharma, Tata Steel, BEL are some of the prime movers there. But overall, Alex, much more positive than what the implied indicated. It's a cautious range-bound start to the market.
Yeah, and I think you had called it out at the start. You expect range-bound action, so that's exactly what is panning out in trade today. Let's pull up the sectoral indices just to see whether that picture is reflected across the board as well. Don't be surprised if there's more green on the screen. That indeed is the case, and we'll talk about some of this, which is that the media index, discount that. It's a pretty narrow index, but beyond that, look at metal, look at India defense. These are pockets of relative strength that have showcased that strength over the course of troubled times as well. You have oil and gas that is back in the green, and this is largely, I would hazard a guess to say, on account of Reliance Industries and the move that it has. Consumer durables looking okay. Nifty Pharma, Chandan Taparia is saying that there are pockets where you should focus in the pharmaceutical space. We'll go back to him after this just to see what is doing well. I remember seeing Sun Pharma in the top of the list when we saw the Nifty 50 heat map, and that's doing particularly well. IT is up about 0.5% now, building on those early gains. What's not doing well is private banks. This you saw in the open as well. You have financial services. Nifty Bank continues its relative underperformance. I wonder when that will swing the other way. Let's talk about individual stocks now, and quite a few to talk about on the back of significant updates. And I want to start with the Jal Jeevan Mission 2.0 announcement, and quite a few of these stocks up and about. Take a look at Prince Pipes and the move that it has, up over 8%. This is expected with that additional allocation by the government to have a significant bearing on the revenue potential for these companies. But remember what Hiral pointed out to you if you were listening earlier today, this could well just be a sentimental boost. So make sure that you study the numbers. Vatek, Wabag, Iron Exchange, these are water treatment companies that have a significant tailwind on account of the Jal Jeevan Mission, 6% and 5.5% respectively. Oil sensitives are something that you should track in any case. ONGC on account of the drop in oil prices, but remember that you have had such sharp fluctuations in oil prices, but that even traders in this will be taking a bit of a breather to say, let's wait till the dust settles a little bit. Those oil prices are more volatile than the stocks that they represent. HPCL, BPCL, IOC taking a bit of a breather on the upside. You already saw what Reliance Industries did. There's a new version of the PM Kusum Yojana that is in the works, and so a few of these stocks, and by the way, those are the tire companies as well, but Shakti Pumps, Oswal Pumps, wow, look at that move, significant move. This is on the back of a new version of the PM Kusum Yojana, which is set to be a tailwind for these stocks. Oracle Finance was up and about in the pre-open session. It's about 2% higher. This is on account of its parent doing incredibly well on the earnings side. That was posted last evening, and this is a significant move, or relatively speaking, a significant move in today's context. Polycab has gotten a tax relief. Remember, it was punished in trade yesterday. It's yet to recover from that level. HG Infra, this stock was gaining quite considerably even in the pre-open session. It's building on that now at the high point of the day, up over 9% on account of that 400 crore order. And there's also a lock-in ending for a number of stocks, so you could see a little bit of volatility, not too much actually if you think about it. Wakefit as well as Corona Remedies and Amanta Healthcare not doing too much on account of the lock-in ending for these stocks. But Hiral, are you spotting anything else? And there are quite a few stocks that are moving on account of the government schemes and the improvement that is foreseen there.
Yeah, I think apart from the Jal Jeevan Mission stocks, few of the other things I want to highlight is, let's just pull up a TTK Prestige on the screens now. The reason I think why this stock is up in trade is probably because of the fears of cuts in terms of cooking gas, and you're seeing sale of inductions that are probably picking up. That stock is up nearly 8 to 9% in trade. We'll talk about that one as well. But apart from this, a few of the other names that we should be looking at is the entire IT pack, which is in focus as well. Electrosteel Castings is seeing a strong up move in today's day of trade, so watch out for that counter pretty closely. Shakti Pumps we've already spoken about. Jindal Saw is another one which is seeing some smart moves in trade today. And on the losing end, Reddington is slightly under pressure. You have SJS also, which is down in trade. TTK Prestige is what I want to talk about. Parag bhai, any view on TTK Prestige? Because always we've spoken about valuations which have been extremely cheap,
high, yeah.
but the stock has done really well.
So company is good. There is no problem with the company. I have not looked at it very closely as of now, but I would say that if this is the reason that it is going up, it will be a temporary thing.
In fact, to add to that, we should just look at a Stovecraft as well. Let's see what a Stovecraft is doing in trade, because if it's induction, then probably it's both these counters. There you go. Both the counters seeing gains in that range of around 5 to 10% in trade. Any momentum on the charts, Kush?
No, not really. I mean, yes, there is some traction on Stovecraft, I would say, compared to at least TTK structurally. There is a break of the 20-day moving average and a falling trend line. So if you have a position, I would suggest a hold rather than a fresh buy. Stop loss at the 495 mark and targets 525 and about 545. But yeah, this should be a quick in and out kind of a trade, not something that I would hold positionally.
Just to say that I know we're completely scoffing at this shortage of LPG cylinders right now. It's taken less than a week of Qatar stopping LNG supplies and less than 10 days of the Strait of Hormuz being shut for us to be in a situation where all major companies have to reprioritize the supply of cylinders to educational institutions, hospitals and houses.
Absolutely.
We are more insecure than it seems. We need to do something about it. So that is for sure. And I won't be surprised if people say, "Arey, ek induction stove leke rakh lete na, kya hota hai?"
Exactly.
Yeah, that's what's happening for sure. Any thoughts there? Because we also had a view that when this ends, and it will end very quickly, HPCL, BPCL, IOC will be ones to look at, because the government will move to shore up these resources.
No, I complete. So first of all, this entire episode of West Asia turmoil has opened us to this huge insecurity of energy. And so I feel that the longer term trend, if you see, I think government will move towards encouraging more and more ethanol blending, more and more EV kind of thing. At least on the auto side, I am saying. And of course, they'll try to diversify the alternative resources of energy, because here we are completely dependent and exposed. So we have to do something about it.
I think that's going to be the name of the game.
Yes.
Thank you so much, Parag Thakkar, Kush Bora and Chandan Taparia for joining us this morning on this leg of the conversation. Nandan Chakravarti, Head Research Strategy at DAM Capital Advisors, joining in this morning as well. Nandan, very good morning to you and great to have you on India Market Open. Superb to speak with you. Is this shopper's market right now?
See, it completely depends on your strategy. So, because a war can never be forecast. People thought that the Ukraine war would be one week. People thought that the Sindoor operations, Sindoor could be 1 week. So I think there's no clear answer to that. I think what is important is to figure out not how long the war will last, but where are the points of disconnect, and to see that in your portfolio, the points of disconnect are not there. Number two, what are the points to monitor?
Nandan, hi, good morning. Alex here. So when I look at your note, you have started by looking at the macro picture, right? And in this kind of a market, when there is so much that you can't predict, as you've pointed out, there are a few things that you should keep a bearing on. And you've highlighted the INR depreciation, you've highlighted monetary policy, both in the US as well as back home. So how, according to you, and we'll delve a little into the micros after we deal with this and we ask you about this, but what direction do you see these macros taking, and what are the implications for stocks?
So I think the most important thing is to monitor three things at this point in time. See, there are two routes. One is the Red Sea route. That is the route for us to both export and import to Europe and to the US. That's open as of now. That means the fertilizers from Russia can come to us. Similarly, our gems, jewelry, your textiles, engineering goods can go to Europe and America through. So that is not at risk. So the first thing to monitor is whether the Houthis will start troubling the Red Sea or not. This, because then fertilizers will become a problem. Fertilizers from Russia. The second thing to monitor is what happens to the Hormuz Strait in terms of the small boats, because the larger boats, America can take care of, Chinese can take care of, but all the small boats lying all over there, that's a problem. And therefore, if Trump's reinsurance policies, what they'll end up in. The third thing is, as we said in our report, is the OPEC response to oil, that is oil supply as well as oil price. So OPEC response, which sort of vessels are being allowed in, and the third within that subcategory is the strategic reserves. So I think these are the three main things to monitor rather than try to forecast what will happen in the macro.
So let's talk about some of those micro factors as well, because you are looking at gainers and you highlighted those, right? You've talked about IT and pharma exporters. You've spoken about shipping on account of freight rate spikes. You've spoken about defense, and you've spoken about upstream oil. And of course, the latest development with a very large company in the energy space with regard to investments made in the US. How do you see all of these developments take place?
See, so what I gave was a list of gainers, and below that I've given a whole list of losers. But what is important?
I'm focusing on the gainers and then.
Is the second part is the gainers and the losers have more or less done whatever they had to do in the last few days, because this is not the first day of the war. So that's not as important now. What is important now is to figure four things. One is which stocks have been over discounted or under discounted so far among the gainers and the losers. So to give you an example, for example, the large private sector banks, obviously the first to have lost money, because that's the first thing people will sell. So I think they have, overcorrected. Just as an example. Similarly, when you think of IT versus pharma, well, IT is a very short-term thing. We don't know still what will happen to AI productivity and stuff like that. So there, I would rather take, as my, analyst Anmol Garg, he just released a report. He says by the second level, the mid-cap IT rather than the large-cap IT. Though both have, corrected and both are sort of safe at this point in time, not undervalued, but fine. So the smaller, the mid-cap IT is the space where there can be much less damage from AI rather than the larger ones. So first thing is over versus under discount. Another example is, for example, the upstream versus the OMCs. The OMCs should have got hurt, but they're still at a reasonable valuation. So why should you buy them at this point in time? So that's the first thing. Number two is who can pass on the cost increases and who can't. For example, a large FMCG player will be easily able to, pass on plastic and packaging costs, and therefore their market share should increase. Similarly, a plastics company, immediately they hike prices. So who can pass on versus not? The third is margins versus volumes. So, if there's a shortage in something and you have it and others don't, then your margins increase. But that depends on whether you have the volume or not. So here specifically, I'm talking about, some of these gas companies, not LPG, on the LNG side and so on. The fourth thing is, just as things happen on the financial front and what you see in the news, there are also things which are happening at a subliminal level. For example, government is taking out regulations, your US, etc., taking out your strategic reserves. So you have to see what is not in the news and happening. As an example of that, in terms of regulations also, remember that this year there'll be two major elections. Tamil Nadu and West Bengal, and there are a few other, Pondicherry and so on, Assam, some of the smaller ones. So the government is also sort of has his hands bound in some of them. So I think these are the 4 or 5 main considerations, rather than taking a list of gainers and losers some 6-7 days after the war is over.
Where would defense fall? Nandan, good morning. Tamanna here. Where would defense fall in these list of considerations as longer term policy move after something like this has happened, fairly close to us? We've seen the impact as a nation, and I would add to some extent even OMCs in that, because we've seen the choke on gas availability fairly quickly. worryingly quickly in everyday lives. So OMC's defense, how would you see these as impact that would continue for the next few months?
So in our report, right on the first page, we made a small little table which says crude, LNG, and LPG as the three columns, and the rows are how much is the import dependency. Of that import dependency, how much is through Hormuz Strait, and the third is storage capacity. It's a very simple table. So I'm saying the only one which was really vulnerable was LPG. It was very clear from that. So on OMCs particularly, they haven't fallen enough. So we'll have to, as I said, unless prices fall enough, you cannot buy, irrespective of whether it's a gainer or loser. Now, defense is a very complicated thing. I can only say Jai Hind right now, because, the radars have got screwed. Some of the biggest radars in the world in the Middle East, and some of them take 5 years to rebuild. That has been borne by Iran. And you know what happened in Operation Sindoor. So Jai Hind again to us. What I'm specifically saying is that in defense, whether it is naval, for example, the Chinese have just alarmed us by having plans to increase their fleet, I think by 20%, I'm not sure, even though they are one of the largest fleets in the world. You have air defense, which is going to be one of the most important things going forward. Then you have, drone technology. So almost everything, whether it's land, air, sea, will see a huge boost as far as defense is concerned. Only thing that the government knows that some of the large players, I can't name them on this thing, but some of the large government players don't have enough capacity.
So execution is a concern,
private sector ones in. And that's the ones to look at.
Okay, so execution is a concern, so look at specifics there. Nandan, quickly, Hiral on this side. Now, broader markets, in terms of valuations, if you have to look at the mid caps and the small caps, you did mention IT, it's the mid caps that are favored versus your large caps. But overall, from a market perspective, are you seeing value there?
Not yet. So I don't think that the market crash, etc., is so much related to what's happened in the world. FIs will come back when two things happen. When the rupee stops depreciating. And the second one, of course, in terms of the tax, the government doesn't want to do, so forget that in terms of the capital gains tax. There has been a problem in terms of capex, but what is hearty is that L&T's order book, both this quarter and the previous quarter, has started growing in both, has grown in both the domestic side as well as the Middle East side, the exports. So private capex, I think, is a good thing. Overall, auto is still continuing to freak out, even though, GST cut has been almost now 5 months. It's still going. The worry is whether the drop in IT will decrease discretionary consumption in India. However, things like Eternal, Swiggy, etc., those parts, auto, a lot of the consumer discretionary still remains strong. So overall, I think don't get into the trap of moving from growth stocks to value stocks.
The trap with regards to growth stocks to value stocks, that is something
don't
that
get
you should,
into,
yes,
because,
don't get into it.
Yeah, remain with growth stocks at reasonable valuations.
Right.
Don't go into this thing. India is a country where, unfortunately, unlike the West, we go for ROC rather than growth.
So look at growth, Nandan. I think that's the clear message coming in. But thank you so much for joining in. It's always a pleasure to speak to you. A growth versus value discussion, always encouraged and always appreciated by viewers as well. So that's the story when you're talking about the Indian markets. But one stock that we need to look at is RK Forgings. Now they're looking to consolidate their market position, and this is by commissioning their new press line in Jharkhand. And now this new installation marks a major step when you talk about the company's ongoing strategy to expand capacity, enhance technological capabilities as well. Let me get in Puneet here to tell us more in terms of what's happening with RK Forgings and what should be the key talking points with the management. Puneet, over to you.
Well, thank you for that. Definitely the three key talking points. The one, as you rightly mentioned, a new press line that has increased the capacity of the company to over 3.11 lakh tons. And essentially what would be the utilization, the revenue contribution, if any, the company could give in FY27 will be one key talking point. The other bigger talking point has been the revival in the growth of the Class 8 truck sales, especially in the month of January as well as in February. The growth has been over 100% on a YY basis, and given, of course, the low base. But if this continues, it would be a big positive for the forging companies. And if does RK Forging benefit from that? That'll be the second key question. The third one will largely be if the Q3 revenue fall of almost 27% in the export revenue specifically is the base. Now, is the momentum only upwards from here? Those will be the three key talking points from this conversation that I'll be watching out for.
Okay, thank you, Puneet, for that. In fact, let's get in Lalit Kumar Khaitan, ED and CFO at RK Forgings. Welcome to the show, Lalit. Always a pleasure to speak to you as well. This is Hira on this side. My question coming to you is the new forging press line, what are the kind of, additions that you're seeing in terms of initial utilization levels, the quantum it will add to your top line and bottom line?
Yeah, thank you. So coming to straight to this forging line, 8,000 ton press line, which we have commissioned recently, considering the current demand scenario, the ramp up will be very fast, and we are looking to utilize almost 75% of capacity in next financial year only.
Okay, so 75% capacity addition in FY27. How much of revenue addition and bottom line addition that you will see out of this line?
So I can certainly say if we are going to make about 75% capacity utilization, it will be more than northward 500 crore of revenue only from this press line. And bottom line is really difficult to comment because it's a mix of lot of things. So I will not like to comment on the bottom line specific to this line, but overall certainly bottom line is going to improve.
And with regards to where 500 crores upwards is the kind of revenue addition that you're seeing at 73%, by when do you see 100% utilization?
Yeah, so certainly, see, any capacity doesn't have the 100% capacity utilization. You can reach about optimum 90 to 95% capacity utilization. That can certainly happen in FY28.
Khaitan, very good morning. Tamanna here. I just want to understand about the kind of demand coming in for Class 8 trucks. That's the heaviest category of heavy duty category of trucks in the United States. And of course, those numbers have surged in Feb. Are you seeing some impact of that? Are you seeing any improvement in requirements coming your way?
You see, certainly there is an improvement requirement, and that is happening much before this February Class 8 requirement. I think we have started seeing this green shoot late December or early January. And certainly it's a good sign to have this kind of Class 8 demand, and it will improve overall exports, no doubt about that.
Because your export realization is actually reduced a bit. To what extent, can you quantify for us the kind of requirements coming in? How will it improve your exports? Can you give us a little more detail, Mr. Khaitan?
See, it was certainly led by only tariff uncertainty. Whatever you have seen the reduction in export sales, that was due to tariff uncertainty. And we were seeing the improvement in this, and with the trade deal, we were hoping for quite a great improvement in the export demand. However, due to again this war with Iran, I think a little bit uncertainty has again come up. But in the medium term, it looks quite good, and the exports are bound to improve.
So a couple of things there, sir, because you said the reduction in realization of exports was because of tariff uncertainty. That uncertainty in some sense closed in February this year for India. You're seeing demand started going up from December. So they seem to be two different things. What is that demand being driven by, and what is the impact you have seen? Any quantifiable increase in orders that you have seen?
It's very difficult to say quantifiable increase in order, but there are, because it depends upon schedules, and the schedules has improved from my OEMs. And whatever, if you want to see the improvement in demand, basically earlier, due to the tariff situation, inventory was being tapered. And once inventory is down, certainly demand will come up. That's the reason the demand has started coming up. And certainly, and that's why we are seeing overall improvement. And tariff situation, the trade deal only helped the situation. And coming to the realization, a lot depends upon the product mix, what we supply. And once the mix improves, the certainly realization also improves.
Okay, just on the second part, Mr. Khaitan, you mentioned that the Iran war has now again created uncertainty. Is there the import costs going up, or the fact that, are there materials stuck for you because of what's happening in Strait of Hormuz? Are you seeing your exports also going down? What is the exact impact of the Iran war as far as you are concerned?
So as far as we are concerned, we are not impacted so far, and our shipments also are not impacted because I don't think we use that line. And I am just foreseeing, because again it creates uncertainty, which may result uncertainty in future. Right now, nothing has got impacted.
Use that line, what is the route then you use? Because right now all of us are trying to figure out how the impact is. The sense is everything is coming through Strait of Hormuz. Why are you not impacted by this?
No, so I think I don't have exactly the route, but there are a lot of routes which are not impacted, and I think that's the reason I think shipments is not impacted yet.
Okay. My question to you then is, overall, if you have to look at the line, I mean, the new forging line is that you've already mentioned, your automotive exports is something that you're looking to reduce and increase the non-automotive side of the business as well. 6,000 crores is what you've guided for in terms of top line for FY26. Are you on track on that aspect, or are you seeing any deviations come in?
No, certainly that's the endeavor of the company, to increase its mix of auto and non-auto. It doesn't mean auto will reduce. Auto will reduce in terms of overall percentage, but in absolute terms, auto will also increase and non-auto will also increase. And we are on track to achieve our auto non-auto mix target.
Okay, so achieving the target mix is something which is on track. 6,000 crores by FY26 is something that Street should be watching out for. But thank you so much for joining in. Always a pleasure to speak to you and get insights. So that's the management of RK Forgings. The stock actually has spiked to the day's highest levels as the management speaks to NDTV Profit, and the new line will garner revenues upwards of 500 odd crores from FY27 onwards, and this is at 75% capacity utilization, with an increase coming in terms of the bottom line as well. So that's what the management has indicated to us. But moving on, the US-Iran conflict is putting fresh pressure on global LNG flows, with the markets closely tracking the potential disruptions in key shipping routes. Now, before we speak to the management of Stovecraft on how these LNG rises could impact the company, Mahima joins us with a broader context. Mahima, the stock is at the day's highest levels, and somewhere this company becomes a beneficiary, right?
Basically, what happens is that the company is in production of electric stoves as well as stoves that use LNG. But the idea here is that one needs to we want to understand as to how this will impact positively or negatively for the company. Now we've seen that the fears for shortages of LPG as well as LNG has been there across India, and there are supply cuts as well. Although the government has said that there are no crisis and there is no single distributor to it, but we'll have to see as to how this has ripple effect on different sectors. This is of course with regards to the first talking point, but the second one, with regards to how Q3 has fared, a lot of brokerages remain positive on this particular counter. Q3 overall revenue growth was very good at the 13% mark. Overall PAT beat was also due to lower than anticipated interest as well as tax rates, and exports for this company have been doing very well, and the partnership with IKEA is also faring very well for the company. Overall, non-stick cookware has grown at the rate of 16%, and cookers have slightly reported a slower growth, but guidance has been maintained by the company at a 15% revenue growth for FY26. So this is the overall view, and of course a view on how this entire shortage will impact the company is something that we need to decode.
Yeah, so quite the number of talking points that we have to take with Rajendra Gandhi, who is the Managing Director of Stovecraft Limited, joining us this morning. Mr. Gandhi, thanks so much for taking the time, and pleasure speaking with you. And of course, one hopes, all of us do, that this crisis is short-lived. But the tendency is that it can have unforeseen or outcomes, and one of them would be possibly a higher demand for induction. Are you seeing increased sales or increased inquiries at the very least?
Yeah, good morning. Yeah, every one of us will want a stable arrangement across the world, and that's what we wish and hope for. And, current challenging times also given, more challenges to the thoughts of domestic households. There is definitely a huge surge in consumption of electric stoves, both induction and infrared cooktops. While we manufacture LPG stoves also, but in the category of induction cooktop, we are seeing very high surge in consumption.
Quantify that, sir. And is this something that you've seen over the last week and a half?
Yeah, it's in the recent times. As it is, we are leaders in this category, but we are seeing very high buying pattern both on online and offline channels on the induction cooktop.
Sir, can you please help us understand what this number is? If you can quantify it, even if you talk about percentage terms, what is the kind of increase if you compare it with the last quarter, etc.?
So we call this DRR, daily run rate. So what we can actually measure, particularly on the online channels, we are able to get real-time data. There is a in the last 1 week, we are seeing 3x kind of surge in the induction cooktop category.
Do you have capacity, Mr. Gandhi, to take care of the output that is required here?
We are addressing, we are well capitalized, but as we move forward in the same kind of demand, there is also challenges on the supply side. There is a huge cost pressure on various inputs. We are addressing that. We have capability to ramp up, but it may not be to that extent of 3-4x currently what we are seeing. But I think this will stabilize. We are, as it is, leaders in this category. We see good growth happening in this in the coming months if the unfortunate situation continues.
Okay, Mr. Gandhi, good morning. Earlier you've mentioned that there is pressure coming in on the supply side. Where is the pressure coming in from, number one, if you could explain to the viewers and investors? And two, because of the pressures, are you seeing an increase in terms of costs as well?
Yeah, definitely there is a pressure on all metals, but particularly since we were discussing induction cooktop, there are a lot of imported components that we import from China, particularly the electronics. There is a strengthening of the RMB and there is a sea freight disruption already. So there is a definitely cost input pressure on the imported components, but not limited to that. There is also a plastic part. There are several plastic parts in the manufacture of an induction cooktop. There is both demand side instability and price rise in the plastic components. So on the cost, definitely there is an increase. We'll have to definitely pass it on to the consumer, but it cannot happen in real time. So there could be a lag, and that could definitely impact our gross margins.
Okay, so Mr. Gandhi, by how much do you see a price hike coming in, number one? And if a lag, would this be in the first quarter of FY27?
No, the first quarter the prices will get corrected. Every quarter we correct our prices. But for this month, definitely we see that impact. It is not only limited to induction cooktop, all metals, and because of forex appreciation on both these counts, there is definitely a price impact on the cost. We pass on every quarter, we correct our prices. So for the first quarter, we don't see a challenge. Definitely there is a challenge in the gross margins in the current quarter. It could impact by between 1 to 2% of our gross margin.
Oh, okay. But I just want to understand. So therefore, if you're likely, at least in the near term, Mr. Gandhi, to see a shift in the mix of product that you're selling, on the one hand, you're likely to see a spurt in revenue. So are you going to be changing your near-term guidance at the very least? And two, because of that change in mix and the pressure on the supply or inputs, what is the impact on the margins?
On the absolute number, we will grow. Only on percentage terms on gross margin, there could be a drop in the current quarter. But otherwise, we are seeing very high growth on revenue in this quarter, as it is even before the impact of this induction cooktop. We are witnessing good growth on the revenue front. So absolute number will grow. But in terms of margin, on the gross margin, there could be an impact of about a percentage.
Just want to reiterate, 15% you're going to hit. Are you going to do better than 15% run rate on revenue?
No, we were not at that revenue growth run rate for the first 9 months, but we will be better than, definitely a double-digit growth we are confident of.
Okay. All right. Mr. Gandhi, thanks so much for taking the time. Pleasure speaking with you as always. Now, we spoke about some of these stocks. Jal Jeevan Mission gets 2028 extension. Let's go across to Sharad to tell us what companies stand to benefit and what the implications are. Quite a few of these, Sharad, are doing particularly well in trade today.
Well, Alex, if you look at the entire water EPC infra theme and also a lot of pipe related companies and solar pump related companies, all of them are doing well in the trade today. Interestingly, this extension has come in and this is roughly 8.7 lakh crore rupees. This is of course an enhanced financial outlay would be coming in, the platform, the initiatives, but the street is really liking the stock reactions, how things are actually panning out. Let's just mark these important stocks for pipes and fittings: Astral, Supreme, Finolex Industries and Prince Pipes. These are the stocks which would gain the most. But the EPC players, Vatek Wabag, EMS, Ion Exchange and even Thermax to a certain extent are having a good exposure in this overall setup. Regarding the pumps and valve segment is very much important because there is a much more requirement coming in, and the KSB, Kirloskar Brothers, Shakti Pumps, Josh Engineering and even Oswal Pumps in the mid-cap, small-cap space are buzzing in trade where a good move has happened. Amongst the smaller players, we have Enviro Infra, Concord Infra and Denta Water also. That's where the good up move is coming in. And remember, one concern is definitely there in the industry. In the first session, or you could say Jal Jeevan Mission, there was issues of increased receivables which we have seen in most of the companies which you would be focusing on, but overall the underperformance has been there. But now if the second scheme comes up, we can see a good up move coming in the coming days.
Okay, thank you so much for that, Sharad. Vinayak Chatterjee, co-founder and managing trustee of the Infra Vision Foundation, joining in. You can't think of a better voice when you want to talk about infrastructure and the impact it will have on India. We've already seen the stocks up, so that one part we have covered well. Vinayak, thank you so much for your time to us this morning. Just the fact that this mission, which seemed to have taken a bit of a pause, has been brought back center stage. How important do you think this is in the picture and the imperative need to make sure that we manage water portability in a more sensible manner?
Good question. You know, when it was first announced that India would, after all these years after independence, finally give 24/7 potable drinking water to 19 crore rural households, it evoked very, very positive response and was probably one of the key Aam Aadmi deliverables after, electricity and LPG and stuff like that and rural roads. Unfortunately, while the scheme was very comprehensively crafted, the results on the ground were mixed. There are parts of India, including remote areas, where villagers have been delighted to suddenly see water in their homes, and they have been well captured in various videos and media deliveries. But there are large sections where the implementation has left a lot to be desired in terms of, the equipment has been laid or partly laid, but water is still to reach. Sometimes it is not of quality. Sometimes it does not have the right pressure. Sometimes it is just doesn't come at all. It's not 24/7. So there have been huge issues at the village and ground level. So the government has done well to take a pause and say, okay, we've learned a few lessons. What do we do? And the 2 or 3 major things that I have learned in the last few days as to how the mission is being reset is: one, it is hugely being targeted towards direct, shall we say, reaching the funds at the village level itself with the ownership of a specially constituted village panchayat kind of committee that will oversee the operations, maintenance and the capex of these projects. So it tends to bypass the state governments, which themselves have led to a lot of issues on, inappropriate use of funds, etc., etc.
Sure.
That's one major reset. The other reset is that the funds release are going to be based on proof of outcome of delivery. Now, while I just heard your stock market analyst talking about how good it is for everybody, obviously it is very good for equipment suppliers who get paid by the EPC contractors. But for the EPC contractors, the jury is still out as to whether they will get their payments on time or they will still have to run from pillar to post in utter frustration to get their receivables, as has been the case in the phase one. But over to you.
No, but so I would say choke in the actual execution is always where the challenge lies, Mr. Chatterjee, and that's what we've seen. Hopefully it will not be the case this time. I just wanted to understand the second order impact of a scheme like this. Of course, clean water, portable water is there, but economically lifting those areas once this mission actually comes into place, that is something we don't immediately calculate usually, isn't it?
It's true. Actually, the biggest impact is in women empowerment.
Yeah.
Rural women today spend a disproportionate amount of their time gathering and storing water. So that itself is going to lead to a high increase in the productivity of women being able to engage themselves in many other kinds of productive work, non-agricultural, crafts, and various other kinds of activities. The second will be in the issue of health. It should lead to a spike in the huge improvement in the quality of health of the large sections of our brothers and sisters who live in the remote parts of the country, who suffer from a variety of ailments that are linked to water. These are two that I can think of straight away. I'm sure there are more.
Absolutely. Vinayak Chatterjee, thank you so much for coming in and speaking in detail and with such clarity on the importance of this mission. Of course, we're seeing the stocks react, but important to understand what the impact will be even on a longer term. We'll take a very short break. Quick look at markets before we get into that break. And, the Nifty dipping a bit from the start, so a little bit of a pay. They're not at its lowest part of the day, but cooling off to some extent. So is the Bank Nifty and the Nifty IT. So that cautious range-bound trade continues definitely. You have some pops of green. So your induction stove makers, your Jal Jeevan mission beneficiaries, all of that is happening. Indigo is still holding strong, but overall sentiment a little cautious, and it would be because there's no clarity on what's happening in the West Asia crisis. That's what we're going to talk about after this very short break. At 10 a.m. every morning, we're speaking to top geopolitical experts to help us make sense of what's happening in the world right now. On the other side, we'll be in conversation with Zainab Malkuti to discuss whether there are any potential de-escalation attempts.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations. The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब डेट पे हमला होगा तो तब
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
First India tour in your city.
Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5.
Welcome back. You're watching India Market Open. This is a segment that we're doing all through the West Asia crisis, speaking to experts to try and help make sense of what's happening and what could happen next. Dr. Zainab Malakouti is joining us now from Singapore. She's Senior Fellow at the Global Peace Institute and Research Affiliate to the Middle East Institute at the National University of Singapore. Dr. Malakouti, thank you so much for speaking with us this morning. I want to start by talking about whether we are actually seeing an easing of hostilities right now, or is this a momentary pause before the next leg? Because we've seen crude prices come off. Is that indicative of some kind of relief?
First of all, thank you for having me. As you probably know, the war started on 28 February 2026, and for now I can't see any sign of de-escalation of this war between Iran and Israeli and US militaries.
Okay. Specifically though, and you've spoken about the fact that there is nuclear capability, and if this the de-escalation does not come to pass, then there is something to worry about here. But explain things from your perspective, and the fact that there has already been the use of trade and the weaponization of trade in the run-up to this crisis as we see it right now, and the militarization of the crisis. But even before that, for months and years, there was the weaponization of trade that was taking place.
Yes, as you probably know, Iran and the US was in the negotiations in terms of, and specifically for nuclear program of Iran. And in the 12-day war that started in June 2025, Israel and the US launched surprise attacks on Iranian nuclear and military facilities. And after that, the President Trump had even stated that Iran's nuclear program was obliterated. And also this time they were again in the middle of negotiations, Iran and the US, and again in the middle of the negotiations, the Israeli and US launched another attack on Iran. In terms of the future and the nuclear weapon program of Iran, so there are some challenging issues that with the new supreme leader of Iran, Mujtaba Khamenei, so there is a possibility for Iran to go toward the nuclear weapons. But at this stage, we don't know exactly about the new supreme leader of Iran's opinion, specifically political opinions.
Okay. Dr. Malakouti, just trying to understand this new aspect that has come into focus after the US President Donald Trump has been posting about it, that they are now attacking mine layer boats from Iran, and claiming that Iran wants to lay mines in the Strait of Hormuz. Is there any precedent to this? Can you explain to this explain to us what would be the impact of this kind of an action? And this would definitely extend the closure of the Strait of Hormuz, wouldn't it?
Yes, you are completely right. Since the US-Israeli launch attack on Iran about a week ago, so maritime traffic through the Strait of Hormuz has almost come to a standstill. This disruption have global consequences, affecting regions from Europe to China and South Asia. because around 20% of the world's oil and gas passes through the Strait of Hormuz, as making it one of the most important energy routes in the world. And following the attack on Iran, the IRGC stated that any vessel attempting to pass through the Strait of Hormuz could be attacked. And so far, as we know, 9 ships have been attacked. So this route is very important for oil and gas routes. It's a very important route for oil and gas into the whole world.
Dr. Malakuti, just trying to understand, where do you see crude prices going off? We're now below 90. If things continue as is, there are some estimates which say that crude could go to 200. Do you see that possibly happening, or do you see crude remaining in this range?
I think that it depends on the following days to see that what's going on between Iran and the US and Israel attacks. But what I can say is that the rise of oil price is a good strategy for Iran in order to make a pressure to stop the war. So probably Iran will do something to raise the oil price in the future.
Thank you so much, Dr. Zainab Malakuti, for speaking with us and just giving us a sense of where crude prices could go. I mean, the long and short of it is, we don't know. We'll have to wait and see how things pan out over the next few days. But keeping the superb conversations going this morning on India Market Open, we have with us Mahesh Nandurkar. He's Head of Research and MD Jefferies India. Mahesh, always a pleasure to have you on. Do you see any opportunity in the Indian market, and are you focusing more on the ex-energy basket and the other stocks apart from the ones that are impacted very directly with the crude price instability?
Yeah, thank you for having me here. Always a pleasure from my side as well. So outside the energy basket, I think there are a few sectors and certain sort of stocks which are looking interesting. In fact, we're calling India now a bottom-up market because the top-down story is not as compelling, especially on a relative return basis from a foreign investment point of view. So we basically calling it as a bottom-up market. And yes, there are certain opportunities. So one segment that we feel very strongly about is the power and utility space. That's one sector that looks pretty good. From a risk reward perspective, I would say a smallish sector, but even real estate looks pretty good, as well. Banks, that's the other one. So I would say that these are some of the sectors that are looking interesting even today. But I mean, if one takes a slightly longer term view, maybe like 6 months or actually maybe more like a 1 year kind of a view, then I think it makes sense to assume that the war and the war related disruptions will not go on forever. And for the investors who can stomach some near term volatility, I think there are more segments that are looking interesting even even at today's price, I would say with a 1 year view.
That's a very positive outlook, Mahesh, at a time of extreme uncertainty. Just want to come on banks, because this is something I'm hearing from more than one quarter, that banks look good, banks look stable, but it's just not showing on the screen. We're seeing continuous uncertainty on banks and knockdown on some of the largest names. Why do you think that fear is? Is this just money reshuffling?
I think the entire market is in the grip of fear at this point in time, right? And for the right reasons also. One cannot really ignore the global geopolitical developments, which obviously have definitely negative impact, not just in the real sense, in terms of the way it impacts the near-term EPS numbers and the profit numbers, etc., but also from the investor sentiment point of view as well, because the investors will ultimately need to attribute a higher equity risk premium to all the global equities, and that's what we're seeing happening in India, but elsewhere in the region, as well. So, so that is impacting the broader markets, and that is impacting the largest macro segment in the market, which is banks. But I feel that banks are sitting quite pretty on multiple positives. The single biggest positive is the credit growth outlook. So, as you know, almost 1 year or so ago, back in like May or June of last year, the credit growth had had slumped to almost like 9%. Now we are in comfortably in the 13% plus zone. So already a 4 percentage point increase. And this is despite the fact that at the current level, the overall inflation or the overall GDP deflator is still at a very, very low level. As we go forward a few months, I'm quite certain that inflation would be trending up. I mean, obviously, what is happening with the oil prices is just one, but more temporary reason. But there are other reasons as well. And as you know, RBI's own CPI forecast is about 4% for FY27. So as the inflation goes up, so will the nominal GDP growth numbers, and so will be the credit growth number as well. So that's one on the credit side. The second point is on the margins outlook, the net interest margin for the banks, which have been under pressure for last 12 months because the RBI cutting rates by almost 125 basis points over the last 12 to 18 months or so. But now the rate cuts clearly seem to be behind. So the margin pressure is behind. So that's the second reason. The third is on the asset quality. Yes, there have been some pockets, especially on the microfinance side, etc. But barring some small pockets like that, the overall credit quality is holding up very, very nicely. And fourthly, the valuation. So I just see all the four ticks in favor of the banks. So yes, right now the stock prices are under pressure because of the macro issues, but I think the sector is looking pretty good. And I think it makes sense to look at. I would say, I mean, it makes sense to go down the curve in terms of the quality. It's not just the tier 1 banks, but even some of the tier 2 or tier 3 banks can also be looked at.
Interesting. All right. Mr. Nandurkar, good morning. This is Alex here, first of all. So just a quick follow-up. You mentioned that you expect nominal GDP to go up. Do you have a figure that you've penciled in? And two, when you're talking about the sectors that you've highlighted, I'm just wondering whether, because of the kind of uncertainty that we've seen on the external front and the impact of crude oil prices, and therefore the flow through on various commodities, whether there's an expectation that you will have to adjust your earnings estimates for FY27, or is it too early to say?
Yeah. So in terms of the EPS revisions going forward, I think there will probably be some EPS revisions, not just for FY27, but maybe some of the companies will, report a slightly lower numbers for the fourth quarter of FY26 as well. So to that extent, there will probably be some downward revisions. Right now, at this point in time, we're looking at next year FY27 corporate EPS growth at around 15%. Maybe it comes down by 1 or 2 percentage points, maybe 14% or 13%, something like that. But even if we assume a 13% type of a number, it is still much better than 8-9% number that we would likely see for FY26. So it's almost a 4 percentage point improvement. And to your first question on the nominal GDP, so this year FY26, we're looking at a nominal GDP growth of around 8%. Next year should be around 10 to 10.5. That's what we're looking at.
Okay. Mahesh, good morning. Hiral here. So that's in terms of your EPS estimates as well. Now, you mentioned about real estate as one of the positive sectors. All this while we were talking about a shift that's happening probably from speculative supply to need-based development. Within that purview, if you have to look at sub-segments, is it going to be urban housing? Is it going to be logistics? Is it going to be data centers? What segment of real estate are you betting on?
See, I'm basically looking at the listed real estate space. So most of these companies have a large part of their revenues and profits are coming from the urban housing. And that's a segment that matters the most from the listed companies' standpoint. Now, within that, what we are clearly seeing is that while the overall market may not really be growing as much, but what is definitely happening is the top 10, top 8, top 10 listed companies are definitely gaining market share. So even for FY26, which is the current financial year, we're looking at the pre-sales growth for the listed universe to be rising by 20% on a year-on-year basis. And over the last 12 months, the stocks are down by about 25%. So in one single year, the business has grown by 20% plus and the stocks are down by 25%. So in one single year, the valuation has got compressed by almost 45 to 50%. And as we can see, some of the promoters of these large listed companies are buying their own shares in the market as well, and which is in the public domain. So I think it's not just the the business that is doing well, but the promoters are also showing confidence in their own sort of company's share price as well, which I think is a is a great indicator. So to answer your question, Hiral, I would say that I'm basically betting on these large companies continuing to gain market share, even if the market as a whole does not really do that well, because these large listed companies are obviously well managed, well funded, and they have great execution capabilities as well. And we have seen this happening in multiple sectors when it comes to consumers, be it jewelry, be it retail, paints, cables, wires, etc., cement, hospitals, that a few large companies can outgrow the sector as a whole. So even if there are some concerns that the sector is close to peaking, but some of these large companies will continue to grow. The valuations are really, really attractive at this point in time. So I think it makes a great, great in terms of the risk reward outlook.
I want to ask about, well, you don't necessarily have to comment specifically on Eternal, but it is one of the top picks that Jefferies has, right? So, but what is the thesis here? Because the argument is right down the middle, Mahesh, with this one, right? So traditionalists would say there's too much cash burn. And the valuations are stretched even if they've come off from peaks. But on the other hand, you're saying the total addressable market is huge and growing very dramatically. So as things stand right now, given that increased pressure of competition is visible in the space, what would you say are the reasons why this is one of your top bets?
See, as you sort of very well know, I cannot comment on individual stocks.
Or the space, okay.
So I cannot really comment on any individual stocks, but at a very broader, e-commerce level, what I would say is that, there are certain segments which are prone to disruption by what we're seeing in AI and what we call in broader terms, the digital disruption. But there are certain segments, we believe will hold up much better, notwithstanding the disruption that is being brought upon by the AI. And secondly, we believe that there are certain segments, certain sub-segments within the e-commerce space, where the industry is growing, reasonably well. And so there are these TAM opportunities coming through, and so that's why certain sub-segments like the food delivery is something, or the quick commerce is something that we like. But I'll not be able to comment on any individual stock.
Okay. So that's with regards to quick commerce plays. Now, Mahesh, how are you looking at the defense pack? Because everyone's talking about the momentum that we will see. Order books could swell up as well. But if you have to look at the entire global defense theme right now, do you think Indian defense stocks are already priced into the global theme of defense right now? And where do you see that next pocket of where valuation comfort could come in?
Yeah, so defense is basically a thematic story, as you rightly mentioned. And I, just feel that, yes, the valuations are not strictly very attractive or mouth-watering as such. But given the fact that it's such a strong global theme, and given the fact that, even India needs to up its, capex program, in a meaningful way, we did see some part of that coming through in the recent budget as well, where the government has budgeted for almost 16-17% growth in the defense capex. My sense is that in when we actually close FY26 or FY27, we might actually realize that the actual spend is more than what the budgeted spend is. That's what I think, because right now we are sitting at 0.6% of GDP as the defense capital expenditure. Historical highs over the last 20 years has been 1% of GDP. And looking at the current situation globally, but also in India's own neighborhood, there is a very strong case for India's defense capex as a share of GDP to be at the highest end of the historical band and not towards the lower side. In fact, I would actually say more than the highest that we've seen in the last 20 years or so. So I'm very bullish on that as a theme. And you're right that the valuations are not strictly very, very attractive. And to some extent, they are pricing in some of this optimism. But I think it's a theme that is going to remain in vogue and remain very attractive over the next several years. So in that sense, we do have an overweight on the defense sector.
Mahesh, this is the most, you're always bullish, but this is the most optimistic I've heard you in a while. That's why I'm tempted to ask you, what's the fly in the ointment? What's the worst case scenario? Because I know you will always look at the positives and the possible challenges on the horizon. What can play spoilsport to this picture?
Okay, actually, you did not ask me any questions about the sectors that I don't like. So therefore,
this is the segue. This is the segue. Is IT in that list? I am curious.
Yes, so I do believe that market as a whole, so just to be very clear, I don't think it's going to deliver more than, let's say maybe like high single digit returns over the next 12 months. I don't think that, we are in a stage where one can comfortably look at a double-digit return. I don't think that's the case, especially because from a top-down perspective, India is still an expensive market, despite the correction that we've seen. Our P multiples at the market level are still more than 20 times one-year forward earnings. And while it might look cheaper as compared to where we were, say, 1 year ago or 2 years ago, but those were crazy multiples to start with. So in that sense, we are on a higher side, and especially from the lenses of a foreign, equity investor, where there are options that are available in the other parts of Asia and in the emerging markets. The relative risk reward is not that compelling, especially because India's corporate EPS growth is actually lower than the broader emerging market EPS growth. But having said that, coming to your specific point as to which are the sectors that we are underweight or are sort of less favored by us, IT is definitely one of those. I would also go on to add FMCG or consumer staples. I would say industrials. Certain parts of broad-based industrial segments are also looking a bit vulnerable, especially given what is happening in the Middle East as well. But also given the fact that the government actually needs to spend more on defense, which also reduces the space that is available for the government to spend on the other type of infra verticals. So so those are some of the sectors that we are underweight on.
Yeah, that makes sense. The defense spends will crowd out other kind of expenditure as well. Mahesh, thank you so much for coming in and speaking with us. It's always a pleasure. Mahesh Nandurkar, Head of Research and MD at Jefferies India, with his view, looks at it in a positive sense, but does say that high single-digit growth in the markets is what you can expect from a 12-month perspective. So let's stay realistic. And that's actually what we're seeing right now as well. A lot of the gains given up on the NIFTY and the heavyweights pulling it down.
Yeah, Reliance Industries in particular moved from green territory to red territory and proving in fact, pull up the contributors chart and you will see exactly that.
Yeah, no, and we said in the morning, we're still waiting to hear from the company. This is Trump who's going out and has announced what he wants to, but it is still the private banks which way in the
exactly. I mean, we've been talking about that bullishness that's coming in from banks, but the street's still not very sure of whether to look at it or not.
And then there's practical. So in theory, they are great companies. In practice, the street doesn't seem to have that kind of reassurance right now. All the time we have on the show, from all of us sitting here, from all of the team that puts the show together, and there are a lot of people who put this show together. Thank you so much for watching. We'll be right back after the break with Ask Profit.
is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
The expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock related queries. My name is Puneet Zaveri. With me as always is Mahima Vachrajani, and it's been a decent day, decent start in that sense for the markets, but largely a lot more to watch out for in the next couple of days, essentially, of how we end this particular week. Let's quickly look at how the markets are doing before we take all your stock related queries, because as highlighted, we've continued to maintain that 24,000 level, but down almost 125 points now, and the GIFT Nifty did indicate a start in the red that has played out through, but hopefully we can find some support at these levels, because the markets started off with 30-point downtake and then has continued to be a down and out day. There are some winners in terms of the Nifty 50, and let's look at the heat map now. NTPC, Sun Pharma, Coal India, some of the defensive plays in that sense are doing well, but largely almost 32 stocks in the red, And you can see that majority, almost 15 to 20 stocks in that sense, are between 0 to 1% on the downside. So these can probably lead to some momentum on the upside, even if they get flat. That will be something that we'll be hoping for. But overall, that's the trend for the Nifty 50. You are seeing some correction on the banking names, which is at a very interesting juncture, but that stays to be the story for now. The sectoral heat map also gives you that perspective, and we continue to monitor the metal pack, which is up almost 1.1%. Auto has been also another one area which has done well for the markets. It's down 0.6% today, but it's the banks, the private banks, which are continuing to be under pressure, and so is the Nifty Bank as well. So that's largely the story. The advanced decline ratio, before I toss to Mahima for the broader markets, has been the other key factor as we continue to monitor. Now, as we start the show, of course, we have given up a lot of those gains from the first hour of the trading session, but stocks which are advancing at 1800, Mahima, is a good stint to watch. A 3:1 ratio that we continue to maintain. We are very happy about that at this point of time, at least.
Absolutely, a slight narrowing in that chart, but whatever said and done, at least a 3:1 ratio is definitely indicative of the broader markets doing fairly better as compared to the benchmarks, because the mid cap 150 right now is trading around 0.3% higher, but the small cap 250 is doing even better. It's up almost 0.8% as we speak. Quickly, if we can try to pull up the BSE 500 before I go on to our guests. You have Adani Total Gas leading that pack, up 13%, followed by Happiest Minds. Second day of gains coming in for the company after raising its guidance. We, of course, did speak to the management as well. TTK Prestige up 8% as well on the back of induction, sales for them going up. Something like a Gujarat Gas, Prince Pipes also doing fairly well. But on the flip side, Colgate is losing grounds today. Reddington, KEI, Phenolics, Polycab, etc. are down in that range of 2 to 4%. But with that, let me welcome in our guest for the day, Vaishali Parekh, Vice President, Technical Research at Prabhudas Leeladhar, and Mr. G. Chokalingam, Founder and MD of Economics Research, joining us now. Welcome to both of you, and a very good morning to the both of you. I'll take up the first question, which is from Lalita, who's writing us from Bengaluru, asking about Apollo Tyres. She's got 20 odd shares, bought at the levels of 510. She is sitting on a loss of around 1,500 rupees right now. She wants to know as to what should be the next course of action for her. Vaishali, I'll come to you on this one. Your view on the charts for Apollo Tyres?
Hi, very good morning, all of you. So, of course, with crude price going high, and this was going to be a trigger, negative trigger for the tire stock. So, of course, these stocks have been corrected. But I would say wait it out, because if it's for a long-term horizon, you can average at lower levels, because this Apollo Tyres per se has come closer to its previous low, that is 400, 410 levels. So I think this is a level that she can average out also, or perhaps even in decline, because long-term cycle, I think we can look at it, and it is at when I'm looking at the weekly chart, etc., it looks quite promising at these levels. So I would say average out at lower levels between 400, 410.
Got that view, Vaishali, and of course, welcome to the show. But the first caller for today, dialing in from Hyderabad, and Manoj has a stock query for us. Manoj, good morning, welcome to the show. What's your query?
Sir, good morning, sir. This is Manoj Kirangam from Hyderabad. Sir, I have the shares of SMS Pharmaceutical at the price point of 290.
Okay.
So, right now, what should I do? Should I buy or more, or should I sell it?
Got it. So, you've bought it at 290. Is that correct, Manoj?
Yes, sir.
Got
yes,
it.
Sir, yes,
all right. And can you bought it with a long-term view or a short-term view?
It's a long-term view, sir.
Long-term view, got it.
But in the situations of going there, sir. So what should I do? I don't understand.
Yeah,
so
fair enough.
Book the profit or...
Yeah, fair enough, Manoj, and I'm glad you called. Mr. Chokalingam, let me welcome, and of course, Mr. Chokalingam is the founder and MD of Economics Research at the show as well on the fundamental side of things. Mr. Chokalingam, he's sitting on decent gains for SMS Pharma. At this point of time, would you recommend him to continue holding? He's bought it at 290.
The company has done well, both in terms of stock market performance as well as fundamentals. But after rising phenomenally, it is trading at around 45 times trailing PE. And if you look at the market cap to sales also, which is one of the key parameters I consider in the pharma sector, it's more than 4 times. So it's fairly valued at this price. So I would maintain, sell on further rises in a phased manner. That would be my research view.
All right, the next question that we have is from Mohit, who's writing us from Ludhiana, asking about Bandhan Bank. He's got 500 shares at the levels of 187. The time horizon is 2 years. Wants to know as to what should be the course of action for him. Mr. Chokalingam, your view?
One can hold it. Of course, right now things are a little bad, but then, the tailwinds for the banking industry is quite good. In terms of price to book value also, it is only around 1.3, 1.4 times. This bank used to trade even at 3-4 times in the distant past. I don't think that can come back, that kind of valuation, but certainly, with the writing of so many bad assets, it can easily come back to 2 times the price to book value. So therefore, I would suggest a hold recommendation on Bandhan Bank.
Got the view, and let's look at the next question now. And this one's on Capri Global. Now, Sriram Raghuraman is holding shares at 197. Mr. Chokalingam is actually asking a fundamental view on the stock. He holds roughly 25 shares. Is that a preferred pick in that sense? Would you recommend that? What's your view?
One can hold it. The stock is trading after the recent correction. It's about 2 times the price to book value. So considering the shareholder profile and the recent performance, one can hold it for a possible another 10-15% upside from current level.
Got your view, Mr. Chokalingam, but one of the key aspects at this point of time has been in the IPO markets, right? Because we've seen a few listings like CleanMax, like Fractal, which have not done well, and a company that listed today, Sedemac, and let's pull up that stock as well, because it listed at a premium of almost 15%, Mahima, at a time where the valuations were at 60 times price to earnings for this counter. So it's very interesting with this particular IPO in the auto ancillary space that even at such high valuations, even with the retail investors just buying 0.2 times of their allocated 35%, it's very interesting that this IPO has done well, and a lot. I don't think a lot of retail investors did buy into this given the subscription data that's available as well. But largely, I had a chance to speak to the management on what their benefit is, because there has been that in terms of valuation, that was a key talking point, and I posed this question to the managing director Shashikant Suryanarayan about it, exactly on what was the the decision in terms of the valuation for this. Let's quickly listen in as to what his response was to the valuation question, as well as the retail investors not subscribing as much. Listen in. Largely relating to the IPO, a lot was talked about in terms of the valuation, right? Because given the current multiple is what we've spoken about, almost at 60 times price to earnings, how did you assess essentially the value of the company at this point of time? Because in terms of the subscription, also the retail base has been a little lower than what I think you also would have anticipated. So if you can start us off with what was the expectation in terms of the valuation, and given, I'm sure based on future projections, if you can give us some perspective.
Yeah, good morning. First of all, this company is not interacting with investors for the first time. In fact, we have had a 17-year history of interaction with institutional investors. Most of it actually is disclosed in the RHP, including who invested at what time, at what price, etc. So it's a very long history of interacting with institutional investors. And over the last maybe 3 or 4 years, there has been a fairly significant secondary market activity in the company, even before we went public. So during the anchor investor process, many of the fund managers who sort of already are familiar with me, because I have been holding investor calls for 3 years now, once every 6 months or so, prior to the start of the IPO process. They had already seen these transactions and had built comfort on how the company is doing and what sort of valuation numbers would be okay with them. So essentially, they were comfortable with the nature of the transactions and the multiples that were seen earlier, and that carried forward in the IPO process. That's pretty much it. So it's not that some striking new discovery happened during the IPO process.
Got Mr. Suryanarayan. So, and the point well taken. Now, you largely, the services that you're offering in terms of, the embedded control units or ISG, those are very critical in the modern, essentially, way of manufacturing, which we've seen in the auto space. So, as the premiumization goes up, I'm sure you will be a key beneficiary. But talk us through your customer base, because almost, one particular auto OEM, TVS, contributes 75% of your revenues for the 9 months of FY26, and 91% are the top three. So, any chances of diversification, if you can talk about new conversation with clients, or is it largely that the top three are growing so fast, so quickly, and the execution that you had with them over the years has been one of the reasons, and investors don't need to worry about that?
Yeah, so first of all, I think it's important to understand what this company is doing. It is bringing some fresh technologies. Okay, the word technology has been abused by everybody in all sorts of contexts. But what we mean by technology is a new way of doing something. So this company is actually making a change in the markets that it operates in. Okay, so for example, the change that we are making in the two-wheeler market was that until 2018, there was no two-wheeler in the country. Okay, no two-wheeler in the country that had an electric start that did not have a starter motor. Okay, so we are causing a change to the market by introducing a technology called sensorless ISG, and today a significant number of two-wheelers, including 5 of the top 10 models, have moved to ISG, and we are one of the reasons for that change. We are not a follower saying that, oh, this is happening and then we will also get in. So when a person who's making a change is in play, then what really goes on is that you have anchor customers. So people who are potential large deployers, in this case the large OEMs, one or two of them will see the potential of this technology and sort of make a call to adopt it in a big way. Okay, so that has happened for us with TVS Motors, and now with Bajaj Auto also coming. You will also see other big OEMs. There is already a Hero MotoCorp vehicle with our ISG. So you will see this consistently growing, and this is not new to us. 10 years ago, when we were not in two-wheelers, the same story was playing out with customer concentration with Mahindras and Kirloskar. So whenever you enter a new market and you are growing rapidly around a new proposition, customer concentration is very natural in the market that we operate in. And we do not see any issue with that. And just because by virtue of more and more adoption, it will naturally come down for any market if our propositions are significant. Even for this year, ending March 25 versus 9-month FY26, you will see a 5% drop in TVS's revenue share, even though we have grown so fast with them as well. So that's a natural process of adoption of any new technology in a market.
Well, that was the management of Sedemic, and the other key concern was 75% of its revenue coming from one single player. But of course, as the company starts listing, it comes up with its results. We'll hopefully catch a conversation with them on their future plans as well, but addressing those two key concerns. Let's go across to our next caller now. Sangeeta has a stock query for us. Sangeeta, good morning. Welcome to the show. What's your query?
Yeah, I was having an ITC shares, and I got a bonus of 1,400 ITC hotel. Okay. And I was accumulating smaller number, and I have accumulated to around 2,000 shares. The average price is 198.39. Should I need to accumulate on a long term, or it's right time to exit? That's my question.
Got it, Sangeeta, and thanks for the query. Mr. Chokalingam, I'll come to you because it's a sizable quantity that Sangeeta holds, almost 2,000 shares bought at 198, and some of the gains have been reduced, right, from 400 stocks fallen to 300. Would you recommend her to accumulate more now, or just continue to hold her existing holdings?
One can accumulate at current price. Yes, the stock has already fallen a lot, and the valuation has become little attractive at around 40p on trailing basis. See, the company has still left with a good amount of cash and some expansion plans. So the earning will definitely improve in the long term. However, I believe EIH Limited, I personally do not own, but I believe EIH Limited is a better bet in the hotel industry, with the Reliance Group and ITC Group having around a 35% stake and valuation being more attractive than ITC Hotel. So I prefer giving buy recommendation on EIH. ITC Hotel hold, but one can accumulate for a long-term ITC Hotel as well.
Okay, all right. So that's the view on ITC Hotels. We've got our next question on ONGC. Umesh is writing in, and he's got it at an average price of 284. 400 is the quantity that he's holding. He wants to know if he can continue to hold this for the next 1 month. Vaishali, considering the volatility in crude prices, do you think that one should keep this stock on their radar for trading right now?
Well, I would say so. Actually, the way crude had given a spike up to 120 levels, but in that reference, ONGC really did not move as much. So I would say keep a stop loss of 260, continue holding. I would for now maintain a range of 260 to 290. Either way, as we see a breakout or a breakdown would decide the next trend. So that would be my view for now.
All right, so that's the view on ONGC. We've got Mohan calling us from Bengaluru. Mohan, a very good morning to you. What's your query about?
Good morning. I have Rajratan Global Wire. I purchased shares of 20 years at the rate of 443. I just want to know for long-term view where I can add these shares for further more.
Okay. All right. Got your question, Mohan. I try to take this with Mr. Chokalingam. Any view on this one, Mr. Chokalingam, Rajratan Global Wires?
Yeah, it has been quite a growth stock. Only thing is slightly its valuation is stretched. One can hold it. In case it falls another 5-10%, then one can buy the stock.
Got the view, Mr. Chokalingam. The next one's coming on Hindustan Copper. A short-term view is what our viewer Sunil is asking. Vaishali, would you recommend to buy now?
The overall full metal pack is doing well, and I think support band is between 540 to 500 levels. So those are the levels where you can start accumulating because long-term trend is still intact. I would look for a target of 650 to 700 for now. So according to me, it makes a good buy between the range of 500-540.
Okay, all right. The next question that we have is from Triambaka, who's writing us from Karnataka. He's holding 50 odd shares of HUL at an average price of 2230. Wants to know if I can buy more, average out from long-term perspective, or should I exit? Mr. Chokalingam, what's the view like? There are a lot of factors playing its part, right? There is new management which is focusing on premiumization, sharp razor focus on volume growth, but there's crude prices which might impact their margins, but there's also summer which is going to support a lot of their sales. What's the overall view right now on HUL?
See, you are touched a right point that in the short term there is a concern of this crude oil price rising because some of its business segments use the derivatives of oil. And last 3 years, all of us know that there has not been meaningful growth in the revenue or profits. And going forward also, FMCG sector is not going to grow in strong double digit. So I am not a fan of buying the so-called FMCG stock. I believe that they are going to struggle in really moving the revenue in a fast way. So I would prefer something like the banking stock, PSU banks, where I am very confident of medium to long-term growth rather than buying HUL. One can hold it time like this from the defense perspective, but I would not suggest buying the stock at current price.
Got that view, Mr. Chokalingam. The next one also coming in on a counter where a lot of investors have reported losses on Dixon Tech as well as Trent. Now Harsha from Vijayawada has not mentioned the buying price, but she's at a 35 to 40% loss on both these counters. Mr. Chokalingam, we saw the HKC approval come in for Dixon yesterday. Some news on PN3 also getting easier. Do you think Dixon is a better bet in terms of averaging right now compared to Trent? Is that your view as well? What would you recommend Harsha to do?
Dixon is better than Trent in my analysis. I have been negative on Trent starting from over 7,000 price. I continue to maintain that it may not fall Trent, but I am wondering whether it can create any meaningful return from current level. Dixon is better, but however I would give just hold only because recently the government has approved over 40 licenses, approvals they gave for starting the business in ECM, electronic component manufacturing. So this sector is also going to see a lot of competition. Of course, Dixon is doing better, but considering the competitive intensity forthcoming, I would give a whole recommendation on Dixon.
Okay, all right. So that's the view on both Dixon as well as Trent. The next question that we have is on Exide Industries. Maheshwari from Chennai is asking this question. She's holding 20 shares at the levels of 378. She wants a short-term view on this one. Vaishali on the charts for Exide.
So, well, on the charts, actually, the stock has only been consolidating. We have not seen much happening. But now that he's held on for so long, I would say continue holding because stock is showing signs of exhaustion as far as the selling is concerned. I would say continue holding with a stop loss of 300. And if you see some momentum setting in, this can go towards 360 to 380. 380 is the actual hurdle level. Above that, it defines a trend. Till then, I would just say it's a range-bound move. 300 as support and 380 would be the target.
Got the view, Vaishali. But time now for the rapid fire round in this edition of Fast Profit. Vaishali as well as Mr. Chokalingam request you to keep your answers on buy, sell or hold. Ramesh from Bangalore is asking a question on Coforge. He's bought it at 1685, Mr. Chokalingam. Should he average down right now?
No, I would maintain just hold on Coforge.
Okay, Jindal Saw is the next one. Ganesh is asking if we can get a short-term view on this one. He's bought around 185 shares. Vaishali, your view on the charts?
Hold.
SJS Enterprises bought at 1850, Mr. Chokalingam, in the auto space. Should our viewer continue to hold his 30 shares?
Yeah, continue to hold. That's my research recommendation.
Okay, Hyundai is the next one. Rohan from Kolkata is holding 9 shares at the levels of 1960. That is IPO price. Hold or exit? Mr. Chokalingam?
I prefer Yamandam. I believe Yamandam is far superior to Hyundai.
Prakruta has bought into Tejas Networks at 461, Vaishali. What can he expect in the short term for his 200 shares?
It's right now 477. I think 520 can be the target.
Okay, the next one is on shipping stocks. Vaishali, Shankar wants to know if this is a good time to invest in any one of these for the next 3 months. Any particular counter that you're liking?
Shipping Corporation of India going into a good trend. Buy with a support of 230. Look for a target of 280.
Good time to buy into ICICI and